Thanks for being here. So let's talk about.
Thanks for having me on.
Yeah, let's talk about what seems to be halting some of this trading is the issue of China and the fact that President Trump appears to be kind of walking back the idea that a deal is about to be reached. How do you see it?
Well, I've said from the beginning that there will be no substantive trade deal reached with China. In fact, we're not even talking about a real trade deal anymore. We're just talking about phase one. And phase one is basically nothing. And I think what the Chinese basically want to agree to nothing is for all the tariffs to be rolled back so that we return to the status quo that existed before the trade war began.
Meanwhile, Walgreens now, they got a boost this week after reports said private equity giant KKR and Company has formally approached the drugstore group of what could be the biggest leveraged buyout in U.S. corporate history, coming in at around $70 billion. So if this entire deal comes together, how significant could be the terms of flexing the power of private equity here?
Well, you know, we're having a lot of private equity deals in the era of cheap money. You know, even though interest rates have moved up a bit, we have 1.5% Fed funds, we have a inflation rate well in excess of 2% per year, even the way the government measures it. So with all this cheap money around, there's a lot of deals that are being done. But if the Fed were to allow interest rates to rise to a normal level, a lot of these deals would not be done, and I think the economy would be restructuring in a much healthier way. Instead, we're continuing to inflate a bubble, and we're propping up companies that would be better off going through a bankruptcy.
So what would actually be the benefit of actually going private here? They haven't been private since about 1970.
Well, I don't know. I mean, I'm not involved in this transaction, but I know there's usually a lot of costs that are saved. If you're not a public company, you don't have to do all of the reporting that is required of public companies. But if they're financing the transaction by going deeply into debt, you know, this is something that will ultimately probably be problematic when the Fed loses control of interest rates and interest rates ultimately rise in a severe recession, which is my forecast.
So, Peter, we know you love to talk about gold and silver. Gold and silver prices have been pretty steady today, but late last week, the precious metals slumped a little bit to three-month lows. Over the weekend, we saw more violence in Hong Kong between police and protesters. Do you think that will cause the price to start to move again? Obviously, folks looking for kind of a safe hedge right now.
Well, the real driver behind the rise in the price of gold is central banks, not only the Federal Reserve, but central banks around the world. And what happened last week is I think we had some profit taking in gold based on some false optimism of a trade deal, which again is not going to happen. Whatever we get will be won't be anything of a deal. It won't change any of the dynamics between the United States and China. But interest rates also rose rather sharply later last week, particularly on the long end of the curve. And that also caused some selling in gold. But ultimately, I think the reason that interest rates are rising is because inflation pressures are rising in the economy and because there's not enough demand for all of the bonds being sold. All of this is very bullish for gold. And so rather than simply selling bonds, people should be buying gold because they need to get out of the dollar. In fact, they need to get out of fiat currencies in general and seek a real safe haven, and that's gold.
And as we come full circle here, you keep mentioning about the trade deal, that it really seems to be, the way you're kind of laying it out, political theater more than anything else, that there really is nothing substantial about it. If that is the case, do you think that both sides will attempt to make some kind of announcement looking as if they have won on behalf of their respective sides within the next few months as part of theater?
Well, I am sure Donald Trump will make lemonade out of whatever lemons we end up with on this trade deal. I mean, he'll talk about it as if it's a victory, just like he talked about, the USMCA, which was simply NAFTA with a worse name. So he'll claim that this was a great deal, even if absolutely nothing is accomplished. You know, the important thing is that the trade deficits are bigger now than they were when Trump became elected. And the whole purpose of the trade war was so that America would be winning on trade again. Well, we're losing on trade bigger than ever, and so Trump would not have achieved or delivered on that promise, whatever he wants to pretend.
Yeah, we can't let facts stand in the way of political theater, though. Peter Schiff of Euro Pacific Capital, thanks for your insight.